All right, ladies and gentlemen, Fortinet did report earnings, and we're going to dive into this because definitely mixed reviews, but take a look at Fortinet selling off pre-market here. Now, this is falling into my ideal stock price of the mid 40s, and so we're going to have to reevaluate everything, but I believe this could be a gift if this keeps selling off. So let's get into this. Here is the crazy thing. Fortinet's market cap is going to open up right around where Palantir's market cap is. Fortinet is pushing over $5 billion in revenue with operating income over $1 billion and free cash flow coming in right around 1.5 to $2 billion. When we compare that to a company like Palantir, as I stated, market cap is going to open up almost identical here, with Palantir projected to do a little over $2.2 billion in 2023. So that means Fortinet does double the revenue, is actually profitable from an operating income standpoint, and is doing way more free cash flow than Palantir. So we have to make sure that nothing's really wrong here with Fortinet, because this is looking like a solid opportunity. So what we're seeing with the earnings is they are coming in slightly light here. So we're seeing growth decelerate. Now, we don't know if this is a long-term problem or if this is just a 1 or 2 quarter issue here and 2024 is going to be stronger. Really hard to tell. But when we look at what they're guiding for here, revenue is projected for next quarter to be 1.38 to 1.44 billion. Analyst forecast was looking for $1.50, so they're actually projected to be ahead on a EPS standpoint. So when we go into their quarterly report, we're starting to see a deceleration of product revenue coming down here, but services is remaining extremely strong. Gross profits are still coming in very strong, going from the 9 months ending from $2.3 billion of gross profits, pushing nearly $3 billion of gross profits, once again bringing it down to an operating income. And we're seeing good strong operating income as well. And when we bring that down to an EPS standpoint, they're earning $1.07 of EPS in the 9 months trailing versus last year earning 68 cents. When we compare this to a Palantir earning 3 cents a quarter and they're trading for the same valuation, this seems to be a pretty solid opportunity here. And instead of being diluted like Palantir does, they are actually buying up stock. So it looks like the concern is actually going to be the billings year over year coming down pretty drastically here, going to 5.7%. That's a big drop off. And then when we look at revenue coming down, this is obviously the deceleration of revenue is possibly scaring a lot of people away here. But of course, now that you start getting over $1 billion a quarter in revenue, it gets harder and harder to grow. And so we're seeing this happen to Fortinet, and that has to bring some attention to a company like Palantir, who's not even doing as much revenue as Fortinet. And you have to understand that there is going to be a deceleration at some point in time, especially when we look at product revenue coming in down year over year. But their most profitable aspect of their business is actually services, and that's still remaining pretty high here at over 25% growth. When we look at their balance sheet, they have $2.186 billion of cash equivalents, and nearly $1 billion of short-term investments, $19.8 million of marketable securities. Pretty big jump down on accounts receivable. So we're seeing a pretty big deceleration in revenue growth. Starting to see revenue growth really slow down in certain aspects of their businesses and in certain regions of their business as well, but still getting over 15% revenue growth. And when we look at a net basis, and I don't want to keep comparing it to Palantir, when we look at a net basis to Palantir is growing around 17-18%. But we have to factor in the dilution that's taking place of nearly 5 and 6%, which brings out a net less growth rate than what this company is doing. And so this is really all about sentiment, in my opinion. For whatever reason, Palantir is a very popular stock. So they're guiding for the fourth quarter of revenue being between 1.38 billion to 1.44 billion. And so when we look at that for the quarter that it's currently in, that is a very slim growth rate. Earnings per share is probably going to come in slightly above 41 cents is what they just did, but not anything that's eye-popping here. It's basically going to do between 42 to 44 cents. So I want to err on caution here and just build a thesis. My thesis is this: if they only can do about 44 cents a quarter going into 2024, let's just say revenues remain flat, what kind of valuation is it currently trading at? We get $1.76 worth of earnings. Currently, the stock's trading right around $44 a share. Divide that by $1.76. The company's trading at 25 times earnings, which is actually very, very reasonable. So what I'm trying to say is in 2024, if they're only earning 44 cents a share per quarter, and revenues are pretty much flat and earnings are pretty much flat, this company's trading at 25 times earnings. So they're projecting revenue to come in between 5.2 billion to roughly 5.33 billion, and they're projected to do anywhere from $1.54 to $1.56. Now here's the problem. We don't know realistic growth rates at this point because there's a lot of things that are taking place within their business that are very, very questionable. And we already talked about them, but it's the geography revenue declines and the product revenue declines. So this is definitely throwing a wrench into what we can project out here. Okay, so I have them doing $5.27 billion in 2023, $5.9 billion in 2024, $6.7 billion in 2025. I have them growing 13% revenue, going down to 10% revenue, going down to 5% revenue. And so roughly by 2031, doing $10 billion of top line revenue. So getting a compounded rate of return of 10%, I'm looking at right around $36 to $37 a share, which is only a few dollars away from where we are currently. And if I'm looking for a 12% compounded rate of return and I'm trying to build a little bit more safety in there, I definitely think between $30 to $32 makes a lot of sense. Currently, the stock is at $43.50. So definitely an opportunity to build into this position if you think that this is a company that can maintain between 12 and 13% growth rates for the next few years, because the valuation is actually reasonable on this one here. So this will be an interesting one to watch throughout the day. Hopefully everybody enjoyed that, and we will see you in the next one.